Hey, you're probably wondering, is now finally the time to start buying apartments? Or is there something better? That's what we're going to talk about right now. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for so many of you that you're working so dang hard for your money. You're now ready for your money. Start working harder for you today. You want to become work optional, where you work because you want to, not because you have to, because you have enough passive income so you have choice in your life. You have that power in your hands. But most importantly, guys, I know you're not just here to get rich, but you want to live a rich life. Because as you're blessed financially, you know you'll have greater resource and capacity to bless the lives of those around you. Thank you for tuning in, guys, allowing me to create that ripple effect through you. As a reminder, if you haven't done so and you're on social media, you got Facebook, you got Instagram, TikTok, check out Money Ripples. Be sure to follow us there today. All right, guys. So you're probably wondering, like I just mentioned, should we be investing in multifamily? Is this the time now to finally be in it? Or is there something that could be better? Maybe something that these other guests have not been talking about? That's why I brought Lane Kawaoka on with us today. Now, guys, if you don't know Lane, Lane actually goes way back with me. I've probably had him on the show several times. But if you're new, especially since we do two of these shows a week, we go 1 year, that's 100 episodes ago. I know it's been probably a few hundred episodes since we had Lane on here. And so I wanted to invite Lane back to kind of give us an update. What has he learned, especially where this guy, I mean, he's been investing in multifamily now for over 15 years. He's been doing lots of stuff with real estate, but learned a lot of different things along the way and invested in a lot of variety of types of investments that really has given him a breadth of knowledge that many people never get in the real estate space. And so I wanted to bring him on, really just cut through the bowl and just find out what's going on out there. Is it now a really good time to invest and where? So Lane, welcome back.
Hey, thanks for having me, Chris. Aloha, everybody. Once again.
Yeah, I know. You make me jealous. I mean, not just because your background, but I know in real life that is pretty much your background. I know you're in Hawaii, so this time of year I get really jealous.
No, it's actually the coldest day of the year here. We have rainstorms,
Oh man, you got down to
yeah,
60 today. Whew.
yeah.
Now I should mention, like, I know we used to actually promote your podcast, but it's changed names since maybe some of our people heard about it. It's no longer Simple Passive Cash Flow. You now have the Wealth Elevator podcast. Is that correct?
Yeah, my book came out quarter 3 of last year, and kind of the whole construct of the wealth elevators, there's different paradigms to the wealth building journey, right? Like,
Yeah.
I think you work with a lot of folks on different levels too, right? Like where you have the folks that in the basement level under 250,000 net worth. I started out of college as an engineer in that first floor, buying little rental properties, did 11 turnkey rentals, and then the second floor and above, kind of moving from there. But, this whole idea of, one size fits all, Susie Orman, Dave Ramsey, to me, like, and going through it, there was definite differentiating paradigms. And that's kind of the whole construct of this wealth elevator idea.
How did you even start into real estate? I mean, because I know a lot of guys, especially if they're like, in engineering and things like that. We have a lot of guys that do follow us in engineering or IT and whatnot. I know a lot of them follow you too. What was your turning point when you said, I'm going to start looking at something more like real estate versus just my typical 401k?
Yeah, I mean, I was a max out 401k guy and then buy your house to live in, right? Because that's what our
Mm,
parents taught us was the escalator of wealth building. So
yeah.
I bought my house to live in maybe a couple years. It took me 80 grand to save up after graduating college. Was in my early 20s and I was working in a crappy job, construction management, where I traveled around the Pacific Northwest with the
Mhm.
railroad. I was the boss out there, but didn't really feel like it because I was kind of on that first line supervisor in a huge Fortune 50 company. Eventually, Warren Buffett bought us, but I was never home, right? And really, I was like, this is kind of stupid having this big house to myself. How can I get even more frugal and, crafty? So I started
Yeah.
to rent that property out. That was back in 2009. And
Mhm.
that was the rest was history, right? I mean, it kind of was watching grass grow. It was by, rental after rental after rental. But in 2015, I had 11 of those rentals, and that was kind of the turning point to syndications and private placements and larger properties.
Yeah. And I know, and that maybe your viewpoints changed. I know last time I had you on, you were really big on that. You're like, man, single family is such a headache. Multifamily is the way to go. Have your feelings still the same? Have they changed? They evolved in any way?
I think it's the same, right? Like as it depends on what floor of the wealth elevator you're at. If you're
Hmm.
an accredited investor, net worth $1 million or greater, or you make a pretty good salary, 250, 300 or more, buying the little rental properties is just not going to cut it for you. And it's high liability because you're the person who's going to get sued for all these frivolous lawsuits that come through. So
Yeah.
being an LP in a larger deal just is a better way of diversifying too. But because you could go buy a 20 unit, 50 unit, but all your assets is in one place. And one of my general rules is you never want to have more than 5% of your net worth into any one particular asset.
Mm.
And you get a lot better synergies, cost effectiveness when you go over 50, 60 units by having property management staff. I think all of us know this, right?
Yeah.
More units under a roof, blah, blah, blah. Multifamily is kind of where it's at in terms of a long term, but the last several years, short term, boy, did it go through a doozy, right? High
Mhm.
interest rates, a lot of people would buy them, us included. We had some assets where you had 3 year or under terms. And in those cases, the good thing is that you can flip the properties, right? And that's what you're doing in value add properties and deals. And you can get out of your loan without a huge prepayment penalty. The
Mm.
downside is if you have sort of a flash correction where we've seen prices come down at least 20 to 30%
Yeah.
off of the highs of a couple of years ago, um, yeah, it's time to refinance, but all your equity is gone at
Yeah.
that point. So that has kind of exasperated the prices coming down. So,
Right.
long term, things look great in terms of supply and demand. People need like, the growing lower middle class, I think is the investment thesis I prescribe to.
Yeah.
The rich are getting richer, the middle class are looking
Getting
to
middler.
live in a yeah, lower. There is no middle
Yeah.
class, they're just lower middle class
Yeah.
living in apartments. But that is, I mean, now's the time, right, to answer your question. The prices are lower, but interest rates are still pretty high, right? That's
Yeah.
that's the headwind.
Yeah. What's your opinion? Like, if interest, I mean, there's a lot of talk, and a lot of people, I know I heard lots of our friends in real estate be like, oh, it's got to come down. It's got to come down. And I was like, not so fast. Like, I'm not so sure it's going to, if it does, it's not a good thing usually. But most of them were still like really betting on the rates have to come down because my deals need it. What's your opinion? Like, what if rates don't come down? Do you think still this could work? I mean, could commercial real estate still be a good place to be?
Well, the prices have come down, right,
Hmm.
because of that, because people can't enter into new deals. And that's the part of every transaction, especially real estate.
Yeah.
What's the price that you can buy it at, and what is the financing?
Mm.
It's like, I mean, just like people who buy cars, right? What's the financing situation and what's the price of the cars? I think, there's only some things you buy out there where you buy it cash in. So it's just a one kind of aspect of the transaction. But
Hmm.
with real estate, prices have come down, but the interest rates have come down a little bit. And the
Hmm.
best information that we have, I mean, I don't prescribe to anybody on YouTube or any of these people. I do prescribe to ITR Economics as
Hmm.
one of a more neutral source for economic data.
Yeah.
But the best thing we have out there for interest rate predictions is the Chatham Financial Curve
Mm.
or the CME Financial. So these are two
Yeah.
big institutional groups that sell rate cap insurance.
Hmm.
So they got skin in the game. They're not just some guesstimate guys out
Yeah.
there. They actually, the bottom line directly is impacted by them predicting this. So
Hmm.
there's readily available information people can go and get, but you can see these predictions have obviously been wrong in the past, but they're the best thing that we have to model properties off of. And what you're seeing, interest rates hit that high at the Fed rate. We're talking about five and a
Hmm.
half percent. We've seen it come down by at least a percent, maybe 20% off the highs, but
Yeah.
this thing isn't going to go back down to zero.
Mm-mm.
Um, maybe, we say ever because in commercial real estate, you count them in dog years, but the next 10, 20 years, they don't predict it coming down to zero. They see it
No.
coming back to more of a steady state at 3.5%.
Mhm.
which we're not quite there yet. I think maybe if things
Another
continue
percent.
on, maybe the end of the year. But I think you're already starting to see the prices bounce off the bottom.
Yeah.
Um, we had a property that we had appraised or BOV on 22 million earlier in 2024. Later in the year it was 26 million. So
Yeah.
that is significant amount more than like any fudge factor. And that was an appraisal that we got. But I think you're starting to see those prices start to come back as this is sort of a national thing, these interest rates. But I don't think it's come down to a point where, I mean, we still underwrite deals and then today's interest rates and more importantly, LTVs. Like people
Mhm.
talk about interest rates a lot in residential um, loans, right? 30-year
Yeah.
mortgages, because that's the only thing that kind of they play with. In commercial real estate, I would argue that the LTVs, the loan to values that the banks give you is a bigger impact than the interest rate. Um,
Absolutely.
so it used to be you could get, in 75% leverage, and that
Mhm.
went way down to like 60% or even less.
Right.
So right now, as we're recording this, we're still kind of on that low level still. That hasn't come back. So
Yeah.
we're reaching the equilibrium point, and some would argue that the prices have kind of came off of the bottoms and now heading up, which
Mhm.
is obviously the hidden buy signal. But to
Yeah.
answer your question with like, just every deal is different, right? I'm just speaking
Yeah.
in generalities here, guys, right? Like, but every deal is different. Especially every situation that you have from a seller, their situation is different, distress or not. But right now, if you go pencil an average good deal out there, it's not really working because the interest rates and LTVs are still too high at this point.
Right.
We did a deal recently where the prices came down to a great level and we were able to get an assumable loan at 3.8%.
Wow.
And this thing, debt service coverage ratio, everybody needs to know what debt service coverage ratio, because that's, to your point, cuts to the crap. That's how much you can service your debt. Most times these deals are hitting at 1.25 in these syndicated deals. In 2016, we would get really excited when we see something that's 1.6,
Mhm.
but this particular deal hit like 2.2, 2.4 off the bat,
Wow.
right? I mean, it's just phenomenal. But that's a rare situation, right? Like
Yeah.
rarely any deals you can assume the debt at 3.8% that has a remaining. I think that one had 8 years left on its term, you know.
Yeah.
But that's yeah, now's the time if you can pair it with the financing is the
Mhm.
answer to that question, I
It's
guess.
true. Banks, I mean, it's not just the interest rates, it's the financing. Like how much down payment do you have to put of your own cash in there? And does it make sense? Is it, and we're seeing that kind of in the residential space too. I know some people might be able to relate to that. You kind of see that a little bit with some properties, but for the most part, they're more impacted by interest rates because they haven't said you have to put more down payment. But imagine if all of a sudden that 3% FHA loan you can get on a house, they said, no, no, no more. You got to put 20% down. You're gonna be frantic and be like, ugh, maybe I'm gonna rent for another few years, right? And that's
Right,
kind of what you're seeing
right,
happen here too.
right. I mean, we're doing some residential things. Can't talk specifics, but
Mhm.
I mean, residential is very different than the commercial real estate world. Residential
Right.
prices stayed pretty steady because you didn't have any of this distress, right? People who are operators who buy deals on under 5 year debt term, which is pretty much everybody out
Mhm.
there uses commercial real estate under 5 year terms. Um,
Yeah.
Unless you're extremely wealthy and buying things out of cash and just barely using any leverage, which, you got to use leverage in real estate. I mean, that's the nice things about real estate is it doesn't move as much other
Mhm.
than what we've seen the last couple of years. Although 20% is nothing compared to what you can get in stock market world, right? With these huge crashes.
Right.
But still 20% is a bigger drop, or what we've seen this past iteration was a bigger drop than 2008 in terms of commercial real estate drop. Um,
Yeah.
but but yeah, it's you know, residential real estate has not been really hampered at all.
Mhm.
But yeah, it was a doozy for commercial real estate. So if you're a contrarian investor out there looking for, we just had you on my podcast where we talked about the four asset classes,
Mhm.
right? Out of the four, stocks is super high, paper assets super high, commercial real estate's down. So there you go.
Yeah. If you were to go back to talk to like the Lane of 5 years ago in 2019 or 2020, uh, what would you say to him? Like, everybody says hindsight's 2020, right? I mean, what would you say to Lane 5 years ago, in preparation for what you've learned now in real estate investing?
I think in 2020 it could have been very much that early correction at that point too,
Yeah.
right? Like we were lining up for the interest rates to go up, then that pandemic thing happened and kind of
Yep.
extended it out and exacerbated the final correction, I think,
Yeah.
in 2022, 2023. But that's where we were talking earlier about investor DNA. You just never know when the top of the market is. If people
Mhm.
do, let me know, but
Yeah.
you always have to have exposure to the markets. And if you're able to diversify your portfolio over 4 to 7 years, you'll be okay because, you jump on a landmine or like a bad year, like how we've seen. Yeah, but the most of the portfolio is intact is the important thing. That's the diversification over a timeline, time
Yeah.
horizon, I think is the important thing. But like I think what I personally learned is, and I'm still muddling this over just from a personal standpoint because I invest in my own deals, obviously,
Mhm.
is, I had maybe 90 something percent in commercial real estate. So it kind of was impactful to me a little bit,
Yeah.
right? I probably, I was starting to get on the bandwagon. I mean, I was obviously been doing infinite banking for a long time. When we started to talk about it in 2016,
Mhm.
it takes a while to kind of move the needle over with substantial funds.
Yeah.
But then I, then I kind of take it in stride and it's like, look, there is no way to get to a significant net worth unless you concentrate on something.
Mhm.
I mean, I think that's where it's a nuance that I pay attention to, right? Like you hear all these like BS investment sages of diversification. And that's what I kind of unpack in my book is like, well, but who are you talking to?
Yeah.
Are you talking to people who are already wealthy, 10 million, $20 million or more?
Right.
Yeah, certainly. Because they can just sit on their butt like the certified financial planner and just collect,
Yeah.
right? They can put it into life insurance, make 5% pretty much guarantee. I think it's guaranteed, right, Chris? I mean,
Yeah.
it's
Now
the
it's
most
six
probably,
percent, but yeah.
yeah, it's probably one of the most guaranteed things out there, even though I'm not supposed to say that word ever.
Mhm.
But in terms of that stuff, it's pretty safe. Um, whereas, real estate investments, stocks, it's volatile, but it
Yeah.
has potentially higher returns. And when you don't have very much money, under $1 to $2 million, you got to go, right? It's kind of like you're behind in a football game. You can't just run the ball and
Yeah.
kneel. That's stupid, right? You have to take some risks. You have to go after. You got to pass the football a little
Yeah.
bit. And I think that's what is never really captured, right? This paradigm, where you are in the journey, there's different types of strategies, different risk tolerances. But I think anybody who created their net worth, I kind of work with mostly first generation multimillionaires.
Mhm.
That person needs to have the investment DNA. If not just have their own business, right? But boy, do
Yeah.
you need investor DNA to run your own business too.
It's true. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Well, and I know we mentioned this on your podcast, but I've always believed that your own business is your number one investment. And obviously that's what you did. I mean, for you, commercial real estate, I mean, that was your business, well, it still is. It is your business, right? Doing these kind of investments. And so for you, it's a whole another layer of control versus someone who's just a passive investor, is like just throwing their money at somebody, hoping, crossing their fingers is going to work out. You can't do that. You got to do some due diligence on your part too, and not just be a blind investor, right?
Yeah, and we've changed our business over the years. I mean, when we first got started, we'd buy these little crappy Class C 50 unit properties.
Mhm.
Boy, was the delinquency on those with that tenant class was difficult. And we moved to the bigger ones. And then we started to do developments because you work with clean assets and you don't really have to deal with difficult tenants in that world.
Yeah.
But in 2022, when interest rates shot up, like these deals didn't even pencil. And like I said, a
Mm.
lot of them just don't even really pencil today. Um, and we had to kind of pivot in a way, right? And especially now,
Right.
now looking at the tea leaves, look at the Chatham financial curve, interest rates may not come under 3.5% ever for all we know,
Right.
right? So I think every business owner understands exactly what I'm talking about. Like when things change, you have to pivot. I know you've pivoted in your business. When deep that was the latest one. I like the start, like the deep seek, the
Mhm.
new Chinese AI thing, right? They could have just cried in the corner when Nvidia never gave them the cool high-tech chips, right?
Mhm.
And been like, pity is me. But they were like, F you, America. We're gonna make a better AI that's a lot more robust and learns by itself. And we don't need your top of the line Nvidia chips. And screw
Yep.
you. Then Nvidia stock crashes 20% in one day. I like stories like this because it's kind of what I've been through these last couple of years, right? Like you have to
Yeah.
rebuild as necessities happen. You have to make the mutation. And for us, it's like, well, a lot of our investors have been our business owners, right? I think a lot of your viewers are business owners.
Yeah.
And you know, what was kind of our whole thing at the end of the day is like building relationships with our investors. So I do retreats and it truly is like, it's a people business at the end of the day. And some of these people have been vendors, like the pool cleaning companies, right? Just to use
Mhm.
a more tangible example. Or you and I have been in business masterminds. Today I'm in Vistage and EO. I think you need $1 million revenue or greater. So somewhat vetted communities. And you see a lot of people who've already the operator genius and already have traction and success. And money magnifies people, as you and I say, but it also magnifies businesses. If you give $1 million to a business owner, doesn't matter what vertical they are in, to go buy out some competition or go buy new equipment, you're essentially magnifying what they are. And essentially we kind of stumbled upon this as like, this makes a lot of sense. And
Mhm.
then we realized, shoot, that's what private equity does. Oh, that's what they do, right? But we kind of play it more on the micro private equity scale is kind of the idea where we allow the business owner to stay on board, because I think the problem with private equity is they kind of come in with a Carl Icahn type of approach, um, just totally like extract the value of a company, and then the employees are kind of like, what happened? And then the old business owner, which this is his like love and joy and creation, he's out. And
Mhm.
let's not get started on going into depression and losing a sense of value because he lost his ATM machine. But that's where like groups like us can come in. We can, like if you got tired of running the money ripples, right, Chris, right?
Mhm.
Like we could say, hey, we'll buy you out, we'll treat your folks right. You know us, we know you, we get your vibe. Or we could just buy you out half, right? So you
Yeah.
can get your nice little payday, go on pay for your all your kids' college education like that, and not
Mhm.
have to worry. But keep doing what you like to do. So that's kind of the role of micro PE, or what I kind of sell it to them as we're friendly private equity instead of the faceless big guys. But
Yeah.
yeah, like you have to create value to make yield and alpha these days, right? Like when I
Mhm.
first got it started buying little turnkey rentals, 30 grand down on $100,000 property that rented for 1,100 a month, beating the 1% rule.
Mhm.
That's long gone.
Yeah.
That's I don't know, I'm a basketball fan. That's like Larry Bird and Robert Parrish coming out of the walkway. It's
Yeah.
not the same Boston Celtics anymore. if you were to buy that same property I just mentioned, it's not 100 grand anymore. It's 140 grand. And the
Right.
thing barely rents for 1200. It's well below the 1% rule.
Hmm.
So that makes me sad. And, I was kind of going down a dark path there with some clients who are lower net worth. Like, what is a guy to do who's on the first floor of the wealth elevator? You can't buy a turnkey rental.
Hmm.
It's not, doesn't make sense
Yeah.
anymore. Um, you have to you kind of pull forced into these syndications and PE, fortunately.
It's interesting you brought that up because we just had a guest on recently, Eddie Wilson, who's had a huge history with not just doing real estate, which he loves, and not to mention his dad was president of a bank, or not his dad, his grandfather's president of a bank, and they've done infinite banking for 3 generations, so they've been doing that forever. But he actually mentioned, he says, I think the number one investment that is trending or is about to trend right now is PE. He's like, I think that's really, you're going to see more and more on the PE side. So I mean, for you, I mean, you went from, I mean, you made that's a pretty big shift to go from like, really like from apartments and hotel conversions and all this kind of stuff you've been doing, all of a sudden now to switching over to PE. I mean, what, what kind of evolution or change or education, like what did you have to do to be able to make that shift and feel confident to even do that?
Well, I think the way we do it, like we keep the operator around, right? The owner
Mm,
around, and they have skin in the game, no doubt about it. They're a
yeah.
significant equity joint venture in the GP. So and that's kind of where it's more about vetting the deal and the people on the front end.
Mm,
No different than a real estate project in a way.
yeah.
Um,
Except you're looking at the
and
jockey and the horse, right?
yeah, the jockey, the horse is that analogy everybody talks about, but it's also there's a couple other aspects people don't talk about is,
Uh-huh.
the racetrack, right? Are you
Mm,
which market are you betting in, or what,
good point.
where are they holding this racetrack? If you're in a high interest rate type of market, like the real estate racetrack, it's gonna be a little bit harder, right?
Yeah.
Like, I mean, the age-old advice of, wealthy people do real estate. Yeah, that worked in a different climate. And not saying like we're still doing real estate deals. We just did one like a month ago. But, just I think what I wanted to do was kind of open up the lobster traps and pick the best
Mm,
out of PE, pick the best out of here. Ultimately, it stems from the relationships with the people in our community. But like, maybe I don't know, Chris, like you want to go buy something else, let us know, right? Like you and
mhm.
I, we get along and we see the value of infinite banking and that type of product, how it makes a great change in people's lives. And
Yeah.
let's go after the people who sell annuities, like
Mm,
I mean that's who I think the infinite banking product is as much superior product to. But you know, I know you treat your folks pretty well, and that's the operator seat.
right. Exactly. So are you coming in really just to finance, or like you said, are you doing some other value add things like are you trying to offer other resources, people, processes? I know that's something that Eddie Wilson brought up is that the only reason he's been able to buy and sell like 100 companies is because he just uses the same people for each of those companies, right? Or for the most part, they might have some of the same people, but they're bringing their team in to make sure that they can kind of secure their investment. Like, what is the value add that you bring to the table with this?
Primarily the money, right? Like
Uh-huh.
we don't want to like I mean this is the Warren Buffett approach. We don't want to
Yeah.
take over anybody who doesn't have the management team in place,
Gotcha.
right? Like I mean the first company I mentioned I worked for was BNSF Railway.
Mhm.
I mean maybe I'm a little jaded, but I do think they had at the time the more progressive management system, and they put us through a lot of, leadership training,
Mm.
and that was the one Warren Buffett chose,
Yeah.
right? But you can do PE different ways. You can pick the ones with the headless leadership that you're going to fire anyway and cut costs.
Mhm.
That's a not to say that's the wrong way of doing. That's just a different way of doing things.
Yeah.
And ideally, I want to put my money in where the only limiting factor is money,
Just capital. Yeah.
right? They already have a proven track record and already going. And this is different. I did a little venture capital investments, which, it's different than this, right? Like
Mhm.
private equity, some of these terms are somewhat ubiquitous. But when I talk about private equity, we're talking about existing businesses that
Mhm.
already have a P&L. very similar to apartments, right? When we look at apartment, we look at the P&L, we run the numbers, and we can make some predictions on how we can improve income, cut some expense. Most time expenses increase, because you're improving the product, improving the income that people pay for. But in these businesses, you already see their profit and loss statement, right? Like the
Yeah.
last one we had was like a $5 million income, right? It's already like legitimate businesses, not very small, not smaller business, but legitimate bigger businesses. And you're just kind of adding them on together, even bolt on, is in one of our projects these days is more in the marketing front. So it's more of a virtual type of acquisition in a
Gotcha.
way, whereas like buying out your firm would be more financial services. So
Mhm.
CPA firms, engineering firms are kind of built on this kind of way. But all the way to like, HVAC companies or, we're talking to a pool cleaning company, more blue collar types of work like that. I think what we're doing is we're allowing the major operator kind of focus on what they do best. And that's the best seat, and the best person, the best seat is kind of the concept.
Yeah. I was going to say, are there specific industries that you kind of gravitate towards, really like right now, or that you put in your fund?
I want to do like a financial planner type of realm
Yeah.
because we're in that space, right? We could add value in terms of leads that we have. Haven't quite found that alternative investing focus, open-minded certified financial planner out there
Right.
yet. Still looking. But I think, like long term, I definitely think that the blue collar fields are going to be much more of a demand. I mean,
Yeah.
like with everybody goes to college these days, nobody wants to get their hands dirty. I mean, if somebody is able to talk with I mean, I came from the blue collar world in terms of, I mean, I was college educated, but they stuck me out in the field managing crews.
Mhm.
So I know what that's all about. If it takes a certain type of leadership, skills, but if you get somebody who's smart and can manage that and can, grow a company in that world, man, that person is going to take off.
Yeah.
Especially with like AI replacing a lot of white collar workers these days, developers, stuff like that. I think that's kind of the world. And again, just like with investment, you want to find things that are kind of hairy, people, unsexy things.
Hmm.
You know, people don't want to get their hands dirty with plumbing companies, HVAC companies, right? They don't want to
Yeah.
do that. They want, these sexy AI venture capital types of pie in the sky ideas. I'm just kind of I see that general trend, and I kind of think that there's opportunity in these less sexy types of models. And also like the baby boomers were the ones who created a lot of these businesses, and a lot of them, I think there's a statistic out there that only 1/3 of these guys have any type of succession plan.
Exactly.
So,
I've heard that.
you know, so to kind of buy up their list, if anything, let alone their infrastructure, you kind of buying it at a much huge discount, in fact.
Yeah. Awesome, man. Well, before I ask you kind of our final question, we ask all of our guests, what's the best way if other people want to follow you? I mean, you get your Wealth Elevator podcast. Any other way that people should follow you?
The book is the new thing, I
Mhm.
think. If people send you an email, maybe we can hook them up with a free copy. Certainly we can give them a digital copy, but
Yeah.
physical copies too. Maybe we can work something out later. But yeah, the book, The Wealth Elevator on Amazon, I think it definitely captures the different floors of the wealth building journey, demystifies that, right? Because I think
Yeah.
I myself was always confused. Like you're going on all these like websites and podcasts, YouTube channel, and everybody seems like they have the solution, but
Mhm.
they, at what stage of the game does it become pertinent, right? If not, you're just
Yeah.
like all this stuff is just like makes no sense, right? It's all random information. Even if
Right.
it's all good, at what point or is it injected in as the strategy?
Awesome, man. Love it. Yeah, we'll make sure we put some in the show notes for you guys, especially if there's something we can do to get them hooked up to your book. So really appreciate that. Last question. Obviously it's the Money Ripples podcast, and we're talking about creating a ripple effect in people's lives. Lane, what do you feel is your ripple effect?
We just had our Hawaii retreat the other week. I always question what the heck it does for our business, but it
Mhm.
was always kind of a a vision that, investing alongside other people that you get along with as a community, or in Hawaii, we call it like kind of a hui is kind of the term that we throw around. But people have these communities at church, and maybe with their old friends and family from college, but like a lot of times the financial aspects get thrown out the window because everybody's in different places. You don't want to sound
Mhm.
like you're all high and mighty, and everybody's in different floors of the wealth elevator. But there wasn't a very big niche for accredited investors. Certainly, guys going from $5 million to $10 million net worth
Yeah.
to get around and have adult conversations. And some of the feedback I get is like it's so nice to talk to other people and have that stigma of not talking about money, not there, and talk about it in a mature way. And then the long-term vision is to have like the kids interact, right? This second
Mhm.
gen kids. Again, like I think the parents can only go so as far. Like I never listened to a thing my parents taught me, which was great because they maxed out their 401ks and did all that pension stuff. So it was lucky for me, but I know that um, when you learn with a community, it makes things a lot more effective and a lot more fun too. So I kind of hope that if anything, that's kind of the lasting legacy. But yeah, if money creates money magnifies things. And at this stage in the game, we're in the growth cycle of my life, and I think our investors' lives, and we got to get after it, because certainly the turnkey rental ain't going to get us there, right?
Yeah. One small door at a time, right?
Yeah, and I'm not, not gonna work, man. Come back when you got like eight of them,
Yeah.
not one more door at a time.
Yep.
Yeah. But it's a great way to start. Like, don't get me wrong. I
Yeah.
think under a 250,000, start with some rental properties. That's what I did.
Mhm.
But there's a pivot point, certainly
There
in
is.
everybody's journey.
Man, awesome advice, man, and great to hear too. And definitely, I know you're creating your own ripple effect in your world as well. And so happy you're able to share that with us today.
Yeah, thanks for having me, Chris. Aloha, everybody.
You bet. So, everybody, we'll work on getting you hooked up with a copy of Wealth Elevator. And hey, this is the thing, guys. Like, the cool thing is that there's so much out there. There's so much opportunity. There's so many ways you could be doing this that can break you free from the mundane, routine crap you hear from everybody else on those different financial channels, everything else. There is definitely hope. And so the question is, what will you do with that information? Will you sit back and relax and just hope that things will work? Or will you do something different in your life to actually make your life special? I challenge you to make it a wonderful and prosperous week so you can make it a prosperous life. We'll see you later.